Welcome back to the Daily Crypto Deep Dive. Today, we're asking a simple question with potentially massive implications. If the XRP ETF actually clears, how high can it really go by 2026? Because right now, we're watching one of the most interesting setups in the entire market. A token once written off as a casualty of regulation, now sitting on the edge of a comeback that could reshape how crypto integrates into traditional finance. XRP is currently trading around the mid-$2 range, hovering in a consolidation pattern that's lasted weeks. To casual traders, it might look like indecision. But to analysts watching the flows, this is a market quietly building pressure. And what's feeding that pressure isn't just speculation. It's a rare combination of regulatory progress, institutional anticipation, and a structural supply squeeze that could all collide once a spot ETF gets the green light. Think about how we got here. XRP was left for dead during the SEC lawsuit years. Exchanges delisted it, institutions wouldn't touch it, and even retail sentiment collapsed. But then came the partial court victory last year, which established that XRP itself is not a security when traded on secondary markets. That ruling changed everything. It opened the legal doorway for something no one thought possible even a year earlier: the prospect of a regulated XRP investment vehicle for institutions. Fast forward to today, and the groundwork is already being laid. The DTCC, the clearinghouse that processes the bulk of U.S. equity and ETF transactions, quietly listed several XRP-related fund tickers on its site. That single act didn't just cause a social media stir. It confirmed that infrastructure for settlement already exists. Combine that with asset manager filings and custody solutions being tested behind the scenes, and it's clear this ETF isn't a fantasy. It's in motion. So what happens when it actually lands? Well, first, let's talk about scale. Analysts estimate a spot ETF could attract between $5 and $10 billion in inflows within its first year. That's not wild speculation. That's based on the realized ratios we saw when the Bitcoin and Ethereum ETFs went live relative to their market caps. If XRP follows the same pattern, you're looking at a liquidity shock where supply on exchanges simply can't keep up with institutional demand. And here's where it gets interesting. The on-chain data backs this up. Exchange balances of XRP are at their lowest since 2018. Long-term holders have been accumulating steadily for months, even as prices chopped sideways. Glassnode-style metrics show wallets holding more than 100 million tokens increasing week after week. That means whales aren't distributing into rallies. They're building positions quietly, waiting for the trigger event. That trigger is the ETF. Once approved, it gives pension funds, hedge funds, and corporate treasuries a clean on-ramp into XRP without touching unregulated exchanges or self-custody. And when you make a previously restricted asset institutionally accessible, you change the entire liquidity map. Suddenly, the same people who ignored the token for years because of legal gray areas can buy it with a click through their brokerage terminals. That shift alone is enough to ignite a re-rating of the asset's fair value. So where does that re-rating go? Base case models from major research desks put XRP between $5 and $6 by the end of 2026 if the ETF is approved and flows materialize gradually. That would represent roughly a 2 to 3x move from current levels. Not earth-shattering, but meaningful for a top 5 asset by market cap. The bull case, though, is where things get exciting. If the ETF goes live earlier than expected and demand outstrips supply, analysts like those at CoinCentral see room for $10 to $15 targets by late 2026 or early 2027. That's a 4 to 6 times return in 2 years. And that's without a macro tailwind from interest rate cuts or a full risk-on cycle. Of course, there's a risk case too. If regulators stall, if inflation spikes back up, or if macro liquidity dries out, XRP could remain stuck in this same range for another year, or even slide back toward $1.80. In that scenario, your $100 today is worth maybe $70 to $80 in 2026. The difference between these worlds comes down to timing. Because when institutional capital moves, it moves fast. And until that switch flips, we're just in the calm before the storm. We're going to take a short break. Stay with us. We'll be right back after a quick word from our sponsors.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
Okay, we're back. Let's get back to the deep dive. To understand why the market cares so much about this ETF, you have to look at the bigger psychology shift around crypto. For years, institutional money treated crypto as binary. You either bought Bitcoin for digital gold exposure or Ethereum for DeFi beta. Everything else was noise, but that's changing fast. In a post-regulation world, institutions are looking for tokens that represent real financial infrastructure. And XRP fits that category almost perfectly. It's not trying to be a currency for coffee purchases or a meme trade. It's a liquidity bridge between banks, payment networks, and digital rails. That story is a lot easier to sell to a CFO than dog memes. When you frame it that way, the ETF is more than just an investment vehicle. It's a stamp of legitimacy that lets traditional finance treat XRP as infrastructure rather than speculation. And that's why we're seeing early treasuries and funds start rotating small percentages of their crypto holdings into XRP, even before approval. It's a hedge against being late to what could be the third major ETF wave after Bitcoin and Ethereum. Now imagine you put $100 into XRP today at roughly $2.50. In the base case, if it reaches $5 by the end of 2026, you double your money. In the bull case, say $10 or more, you're up 4x to 5x. And if it hits that upper band around $15, you're talking about a 6x return in under 2 years. But the key is this. You're not betting on a pump, you're betting on a systemic shift in who owns the asset and why. That's a much more powerful narrative for long-term holders. Technically, the setup aligns with that story. XRP's long-term trend line from its 2023 lows is still intact. It has built a series of higher lows and is sitting right below a critical resistance band between $3 and $3.30. Break that decisively with volume, and chartists see a clear path to $5. That's your confirmation signal. Below $2, the bull structure weakens. But as of now, momentum remains constructive. From a sentiment angle, the market is still cautious, which is bullish in itself. Funding rates are flat, not frothy. Retail interest is lukewarm. Social volume around XRP on platforms like X and Reddit is up, but not at mania levels. All that means there's dry powder sitting on the sidelines waiting for confirmation. The ETF headline would be that confirmation. Now let's pull back the lens and look at the macro context surrounding all this. The US economy is still in that delicate balancing act between inflation control and growth. Treasury yields have eased recently, which has reopened risk appetite across equities and digital assets. Bitcoin bounced off its own floor around $104,000, and the entire crypto market cap stabilized after weeks of corrections. That environment creates room for assets like XRP to breathe, especially those with fresh catalysts on the horizon. At the same time, regulatory tone is softening. We saw the Bank of England pivot toward a more pragmatic stance on stablecoins, and US lawmakers are closing in on stablecoin legislation that could normalize crypto settlement and financial infrastructure. Every step toward clarity reduces perceived risk and pushes institutional capital closer to crypto. So XRP's ETF story is arriving at the perfect moment in that cycle. Another element is competitive positioning. If XRP gets its ETF first among the so-called utility tokens, it sets a precedent that could influence the SEC's stance on Cardano, Solana, and others. That's why analysts are calling this the third wave of ETFs. Bitcoin established store of value, Ethereum represented infrastructure, and XRP would represent payments. Once those three pillars are in place, the entire crypto market can reprice as a multi-asset class, rather than a speculative niche. So for the listener trying to make sense of it all, the XRP ETF isn't just about price, it's about maturation. It's about crypto finally being integrated into financial products your parents' pension funds might own. And that's what creates sticky capital, money that doesn't dump after a 5% drop, but allocates for years. Zoom out further and think about how this fits into the geopolitical landscape. Cross-border payments are still slow and expensive. The SWIFT network is old, fragmented, and costly for smaller banks. Ripple's infrastructure offers a faster alternative, and if regulators no longer see it as a threat, institutions will embrace it as a tool. The ETF then becomes a way for investors to participate in that transition without running a node or signing an on-chain transaction. It's a front-row ticket to financial modernization. None of this guarantees a moonshot. Every narrative in crypto comes with risks: regulatory reversals, macro shocks, unexpected competition. But for the first time in years, XRP's risk/reward looks rational. You have a clear fundamental catalyst, tight supply, and a technical chart that's coiling rather than collapsing. That combination doesn't show up often in this space. As we head toward 2026, the roadmap is simple to watch. ETF filings and approvals, institutional flows, exchange balances, and macro liquidity. Each data point is a piece of the puzzle. And if they align, if the ETF hits, if the flows come, if the supply stays tight, you'll likely see one of the cleanest breakouts of the cycle. That's when the $10 and $15 targets move from fantasy to forecast. For retail investors, the lesson is patience. You don't need to catch the exact bottom or the first headline. What matters is positioning before the wave crests and having the conviction to ride it through volatility. Because when the institutions arrive, they won't be buying your $2 bags. They'll be buying $8 breakouts and calling it cheap. So where does that leave us? Right now, XRP is a story of balance, between hope and proof, between accumulation and confirmation, between regulatory clarity and regulatory risk. But it's also a story of momentum. Quiet momentum. The kind that builds slowly until it erupts all at once. Whether you're a trader, a long-term investor, or just someone trying to understand the next phase of crypto's evolution, this is a moment worth watching closely. If the ETF clears, XRP doesn't just reprice, it graduates. It moves from being a token fighting for legitimacy to an instrument recognized by the same systems it once challenged. And when that happens, the implications stretch far beyond XRP holders. It means the era of blockchain assets living inside mainstream financial portfolios has fully begun. So maybe the better question isn't how high XRP can go, but how far crypto itself can climb once those walls finally come down. We'll find out soon enough. Drop your thoughts below, hit like, follow, and as always, we'll see you at the top.